All right, everybody, welcome back to another edition of Dr. Stocks and Market Talks. Market Talks with Dr. Stocks, coming to you from the live trading room over on our website, www.drstocks.com. That's drstoxx.com. And if you want to join us in our live Discord room and watch what I'm trading throughout the day, you'll get my entry price, stop price, target price, how I'm approaching the trade, what options I'm using, strike price, expiration, and all of that. Click on that live trading room button. You'll see at the top of the site, and that will take you to join us. We'd love to have you join us with a big group of really fun people to hang out during the trading day with at all levels of trading. We'll accept first time traders and experienced professional traders and everybody in between. If you need a trading system, click on manuals. If you want to learn how to trade, click on webinars. And if you want me to show you my nightly trade setups, in various sectors of the market, click on subscribe. And we're good to go. So let's jump over to some charts. We've got an interesting market day going on today, and that's not the chart I want to start with. Let's get over to indexes. We are mostly green. You can see the Dow Jones is down 31 points. The S&P is up 0.5%. The NASDAQ is the strongest in the group of the major indexes, and that's largely because we've got stocks like Avgo and Tesla and Google doing really, really well today, amid some knockbacks in some other interesting stocks as well. Small caps are up 0.8%, doing pretty well. It was a little weak on the early side, and now we're rallying higher. That's always good to see. Always good to see the small caps doing well, bonds doing well, shiny metals doing well, biotechs, growth names, and a variety of other sectors that when they are doing well, we know that we're in a risk-on environment. When they're not doing so well, it's typically more of a risk-off environment. We don't want a risk-off environment. We want risk-on. So that's kind of where we're shifting, I think, from more of a small set of stocks that are doing really well to a broader set, especially those lagging sectors that have not done well in 2024. I think they're going to do much better in 2025. So we have to keep abreast of that. And that's one of the things I'm going to do with you today. We're going to look at some of those sectors that I think will outperform this next year. All right. So, hello, sir. So let's take a look at some indexes. We've got the S&P 500 looking very good. So we had a little bit of a breakout a couple of weeks ago. It's been in a sideways bull flag kind of pattern. It was down Thursday, down Friday. In fact, it did close a little lower on the week. It was down about a percentage point on the week, right back up again today. And now we're banging again on that upper resistance trend line. The more you knock on that door, the more likely it is to open. So expectation here as we head into the Fed meeting, which is in 48 hours from now, 48 hours from now, we'll know what the Fed is doing, and we'll hear Powell give us a little talk, and then he'll answer questions from the press. And that's typically about an hour of a lot of volatility. Once that stops, I think we'll start to see some good bullish action in the indexes, in the mags, and in some of the sectors that we'll be looking at here in just a moment. All right, so that's the S&P. The NASDAQ 100 is just up, 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 up. It hasn't had much in the way of a pullback. It was up last week. It looks like it's going to have another big week. We do have to be very careful. We're not long QQQ. We're not going long TQQQ. We're not even buying something like FNGU or BULZ. Why? Because things are pretty far extended away from their means. They're up into the blue zone of the uptrending LRC. That's a 2.0 standard deviation away from the midline. That's typically a place where you start to see some weakness filter in, or something like a blow off top, right? You get really big up day on heavy volume, and then it's all downhill from there. We don't want to get caught in something like that. There are plenty of other setups that have a better risk to reward ratio than this one right here. But that said, it is very good, very, very good to see the NASDAQ leading the way higher. These are the blue chip tech stocks. They are the stocks that we love to trade. They are the best trading stocks in the market. When the NASDAQ is happy, everybody's happy. Now, I should actually be saying that about the small caps, but it is certainly true about the Nasdaq that when the Nasdaq 100 is doing well, it tends to bring everybody up with it. Small caps, all right. So pull back, pull back, pull back, pull back for 3 weeks in a row. It went from the blue zone all the way down to the rising 50 period moving average, not too far from the pink zone. We're down in the salmon zone, so we are below the midline, and we're seeing a nice looking, potentially bullish engulfing candle form today. It's not real big volume. Actually, it won't be an engulfing candle, but it will be. It's right now an inside day candle, and inside days at the end of a downtrend tend to be reversal pivots. So I'll take an inside day bar. I'll take a directional bar, which would be a close above Friday's high. We're not there yet, but we're inching our way there. And we went long today, the IWM, with some calls and going out to next month, January. I do think that's going to be a pretty good trade. So Santa rally, January effect, and the fact that it's already had a good pullback, you put those three things together and you've got the ingredients for a really, really nice run in the small cap index. Now, if the Fed comes in any way hawkish on Wednesday, you're going to see this reverse right back down, and then we'll be in the pink zone, and that's going to really suck if that happens. But I don't think that's going to happen. Why? Because inflation is a little bit sticky, but it's still way down from where it was. We're starting to see the labor market get a little bit softer. We're starting to see some sectors, important ones like energy, really fall in price. So that's good. Rents are coming down. Gasoline prices are coming down. The price of eggs are coming down. We just need to get like coffee and milk and other things coming down as well. Not there yet. All right, so we've got the small caps potentially flagging a reversal today. We anticipated that a little bit by going long calls in the live room, and we already have a position on in TNA, which we've been in for months and months now, and it's just doing really well, really well for us. But we added on some calls on top of that for a little extra punch playing this reversal. So we were long gold last week, and we raised our stop, and then we got stopped out on this big red bar right there on the reversal. It looked like a classic breakout move above that pivot high right there. Broke out, held it followed through the next day, right? Classic technical analysis 101 breakout. You get the breakout on day one, you get the follow through day on day two. Volume on both days very good, and then it just cracked and fell right back, and that happens, right? That's why we use stops when we're trading. Sometimes we can move our stops up to protect some profit. In this case, we weren't quite there yet, but it was a very small loss. I think gold is setting up again. Gold, silver, platinum, some of the other shiny metals should do well in a dovish Fed market, right? It's as rates start coming down, shiny metals start looking more attractive, and we do have a short-term uptrend forming right here, and we're down at the support lows. So that could be setting up quite nicely for a new bounce higher. But I'm not going to get long gold today. We'll see where it goes tomorrow. All right, so those are the major indexes. We're bullish on all of them, but we need to see the small caps, IWM, follow through on this reversal bar that's printing today. I would like to see the QQQ cool off a little bit to give us a better entry, because it's not an entry right now. And the S&P 500 is just ready to go. It's absolutely primed for a big leg higher. Now, with that said, tomorrow we're probably going to see a little bit of back and fill, right? This is a strong day on Monday, but then tomorrow we're going to have to price in some, we're going to have to discount some fear around the FOMC. That will happen tomorrow. So I suspect we'll either get a sell-off here into the close. I don't think that's going to happen. More likely we get maybe a little gap and crap tomorrow, maybe a gap and go to the downside tomorrow, but I suspect we'll get a little more bearishness tomorrow heading into Wednesday. Wednesday will be very quiet until 2 o'clock, and then the fireworks start off again. And in my mind, it is rally time starting tomorrow afternoon from about 3 o'clock or so. Unless Powell comes in and plays the Grinch. If he plays the Grinch, then all bets are off. So let's look at a few of the. No, I'm sorry. Let's look at the mags first. Let's go over to my list of mags, and we'll sort worst to best. So ARM, this we were looking at this last week in the room. A lot of the so we were in ARM using a naked put as our position, and it did perfectly well. We were down at 125. Was it 125? Because we got in last week. No, it wasn't 125. It was 135, I think it was. Or no, 140. It was 140. And the price at the time we put it on was like 138. All we had to do was get up above 140 by Friday. We would take full profits, and that's exactly what happened. It closed way up here at 152. Then, the question arises, well, should we, now that we're out of those puts, we took our full profits on them, we didn't get put shares, should we then go around and buy the shares? Well, one of the things I pointed out in the room is that this stock in particular, yes, it can print a nice looking rally, and it did early on in its IPO history. But now we're in a place where there's a lot of negative sentiment around semiconductors in general. In part of that is China and regulations, and part of that is unknown impact of tariffs. And ARM in particular seems to be unable to get a good, healthy, multi-week rally going. Every time it gets up, as you can see these blue arrows, it looks like it's a fresh breakout, gets slammed right back down. Breakout, slam, breakout, slam, breakout, slam, and the same thing happened all over again. So I said last week, we're not going to buy ARM. As good as it looked on that green candlestick when it was fully green all the way up to the top, it just is not showing us the history of a sustained breakout move and a sustained trend. This is why it's very, very important when you see a pattern developing to respect that pattern. If you may want to go long, you may want it to be bullish, but if it has not been able to be bullish in the recent past, it probably won't be bullish now. So respect those patterns. And it's not that it can't break out and keep going and just surprise everybody, but the odds don't favor that. And we like to trade with as many odds in our favor as possible. All right, so that's ARM, and NVIDIA is the second worst, same sector, breaking out of a supporting, I'm even not sure if I have that in the right spot, but it is close to that line. It is breaking the neckline of a head and shoulders top. So this is the thing about head and shoulders tops. They are a rather unreliable trading pattern. And let me just take this off for a moment. There it is. Okay. All right. So it does look like, from all perspectives, that, hold on, let me get my pattern thing up here. Head and shoulders. It certainly looks like there's your left shoulder, your head is up there somewhere, here's your right shoulder, and then we broke the neckline, started to do it on Friday, followed through today. That's a bearish pattern, and about 55% of the time that you get that neckline break, you get further downside, and about 30% of the time it goes all the way to the pattern target. Now, 30% completion rate is not very good, right? Those aren't odds that you want in your favor. You want the 70% on the flip side in your favor. Where is the pattern target for this? Well, you take the length of the head, you add it to the place where it broke out, and it would be right around 120, 119. It's 131 right now. So as far as I'm concerned, NVIDIA is a no-go zone until that gets right back up, takes out today's high, and gets back above that neckline. We're certainly not there yet, and it doesn't look like that's going to happen today. We are, however, in the pink zone of an uptrending LRC. And my mantra is you buy the pink in an uptrend, you sell the blue in a downtrend. And here's the thing about Head and Shoulders tops. This is not true of the Head and Shoulders bottom. That is a much more reliable pattern. But a Head and Shoulders top is very often hiding something that looks more like this. It's that right shoulder is not really a right shoulder. It's part of a falling wedge. The head, the right shoulder, and then the neckline itself tend to be more of a bullish pattern, which is falling wedge. Now, falling wedge is not bullish until it breaks out to the upside. What we're doing right now is we're breaking through the neckline or the supporting line of this wedge. It's a no-go zone. Stay away. If you're long, I would suggest selling because further downside is what the chart is saying right now. But there is a very good possibility, and this is NVIDIA, right? It is the bluest of the blue chips, the best of breed in the space, that it will take out today's high and get back up above that resistance trend line. Until that happens, however, I'm not that interested in it. So that's NVIDIA. Qualcomm has been in a world of hurt for a while. I'm not sure what's going on with Qualcomm. Adobe got whacked on earnings, still way down there. It's a no-go zone until that starts to get up into the gap. AMD cannot catch a bid. I do like what's happening today. It does look a little bit like we're starting to see some people buy some shares, jump back in to this beaten down name that has a ton of value. It's just that it's reliant pretty much on the PC business, and PC sales are falling. So it's a tough go. It is in the pink zone, but it's not an uptrending LRC. It is showing kind of a wedgie thing, and I would suggest that we wait until this wedgie starts to break to the upside. If you nibble a little bit here, I'm not going to yell at anybody for doing that, but look at this volume balance, right? The market has known for a while that NVIDIA is not a safe space, not a good investment. The market has known that. You've got distribution all over the place. Yeah, there are some hedge funds out there, a couple of guys who are really good at it, who are buying shares, but let's wait until the market confirms those buys. I'm not going to anticipate. CRM, still very bullish. So this is what I mean by a power gap, right? You get the gap up. In this case, I guess that was on the election. A lot of stocks gapped up on the election. And it gaps up to a new 52-week high. In this case, this might be an all-time high. And it can come back to test that gap up. It can come back to test the former 52-week high, now support. But that's a place where you want to buy it. You don't buy it on the gap up. That's a little too, you're more likely to sit through a drawdown if you do that, right? My big green stick rule applies here. But if you can catch it on the pullback and you get a reversal bar like this one right here on good volume, a volume higher than the previous day, that's a nice swing trade. If you get it to pull back into the 21 period moving average, the 50, the midline of the LRC, even the pink zone, as long as it doesn't get back down under that 52-week average, as long as it doesn't close the gap altogether, you're in good shape. So CRM is, and of course then it went way up on earnings, is in good shape. Netflix up, starting to bull flag. This actually is not a bad setup. Wouldn't kick anybody in the pants for buying some Netflix today. But among the mags, it is one of the few that has some potential to go higher with a tight risk, right? You can put your stop underneath Friday's low as a tight risk trade. Microsoft up. It hasn't been in good shape. It's still well below the 52-week high, well below all-time highs. It is up in the blue zone, typically a place where you see things cooling off a little bit. It is starting to flag, so it could be just a pause here before it prints the next leg higher. But there are better setups out there. So let's focus on the best. Apple, up, 4-day flag, up again today. Very good, very strong. But again, we want to see this give us a little bit of a better entry. So Facebook, not a bad entry. It's very similar to Facebook. It's very similar to Netflix. You have the breakout. You have a little bit of a pullback. Every little pullback is getting bought. Amazon up, up, up. We need it to cool off a little bit. Google is just Google. Really, it gave a great entry down here near the pink zone and an uptrending LRC with stacked MAs. That's where you wanted to buy it, even though at that point it didn't look all that good. And it was just off to the races from there. I'm not even going to look at Tesla because I have Tesla long shares in my family fund. I've been long Tesla 6, 7 years now at an entry price under $15 per share, if you can believe it, on a split adjusted basis. So I'm happy with Tesla's amazing success. But as a swing trade, we've kind of missed the boat. I'll show you where the best entry was. There was down under here as it was coiling underneath 52-week lows around 260, just a little bit below down here in the pink zone. Perfect entry. You had the breakout. You had a little bit of a very quick pullback that could just difficult to buy that. But this little sideways coil right in here, right around 340, was a second potential entry. You don't buy this. I know if you love to trade Momo stocks, this is a Momo stock, and you can ride this one as to your heart's content. But I just have to warn that this is the kind of setup that we'll see a big flash crash in the next day or two, potentially. Not that it has to do that. It can go sideways. It can go sideways for a month or 2 months. But it's just that then you don't want to get stuck in a sideways range bound condition because you're not going to make any money that way. But boy, we missed the boat as a swing trade. But if you're long Tesla with me as a long-term investment, it's just doing really, really well. I would like Micron to get back on track. It's having a very good day today. It hit the 200 period moving average, recoiled a little bit. It's just that it's been quite a mess, right? It is slightly uptrending. The MAs are not stacked. The 21's below the 50. The 50's below the 200. So you're looking at a stock that has pretty much been in a downtrend for a long time. Starting to get back on track right now, but I think what's really going to need to happen to have confidence in this trade is that it needs to get up above that recent range right there, which is about 114. All right, last thing I wanted to show you I'm just going to look at a few sectors that I am interested in. One, of course, is the small caps, which we looked at already. As I said, we went long calls this morning. We are also long a longer term position in TNA. Both of those doing well so far. Well, the TNA we've been in for several months now, so that one's doing really well. This is ready to go. And again, in a rate sensitive environment, as rates start to fall, interest rates start to fall, loans get cheaper, capital lines of expenditure get cheaper, you're going to see small caps outperform. They're going to outperform. They've been lagging. They're well below their all-time highs. The small cap, the Russell 2000, well below, because we've been in this raising rate environment, and it makes their ability to do business and make a good profit harder and harder. But as we see those come down, we're seeing rates come down all over the world. Frankly, China's down to 1.7 or so. Europe's coming down to 1.5, and we're up here at 4.5. So yeah, we need to catch up with the rest of the industrialized world. So there's small caps. Small caps, we can be bullish on this basis that it is rebounding today. Pretty good volume as well. And oversold stochastics. In fact, this is the lowest stochastic since that low there in September. That was a nice swing low as well. Labu, we went long this morning, and it is bouncing nicely out of a very clear multi-test line of support right around 100. 100, give or take $3 on either side because of the volatility and the momentum that gets baked into the shares. Deep oversold stochastics. It got up to the 200, the 50, rolled right back down. Slightly higher low printing today. A directional candle, which means we took out Friday's high. That's good. And volume is above average so far. So all of this is pointing, even though we are in this downtrend, but it is Labu, it is biotech. We can be, just on a macro basis, we can be a little bit more bullish than we normally would be per the technicals based on the changing macro environment. So we got long early this morning and it's up around 107. If it can clear out, let's see, this cluster right in here. So 116 is going to be a problem. If it can get back up above 116 to 124 in that range, then it has a very good chance of testing the recent pivot high and even getting back up here to about 132. Let's look at TLT for the bonds. So let me get rid of this old stuff. So bonds, of course, will do well on a dovish Fed, on falling interest rates, yields coming down, of course. That's not where we're at right now, but it has come down to of a place of support where it has found support recently and bounced very strongly. You know, a 5% move in TLT is a very good move indeed for bonds, especially when it happens in about 2 weeks. You can leverage that with TMF, which is the 3x version of this index, and that would give you a 15% move. And I think we're about ready to get on board that again. We'll see what happens on Wednesday. I'm not going to buy bonds until Wednesday, but I do think that it's gearing up for a nice bounce off of this changing macro environment. What was the other one? Utilities, XLU. You can leverage this one with UTSL, the 3X version, bullish version, but it's not ready yet. So it looks like it wants to come down to about 77. It's 77 and change right now. Test that low. We are below the LRC, so we are below an uptrending LRC. That's 2.0 standard deviation. Very seldom do you get outside of the range that you then don't go back into that range. So any moment now, we can expect the utilities to make a reversal and gear back up. But it hasn't done that today, and I'm not buying these again until after the Fed. Let's take a quick look at the homies because they tend to do well in a falling rate environment. They're not flagging that just yet. It's interesting. We've got the small caps up. We've got biotechs up, two of the sectors that do well when rates fall. But we've got weakness in the home builders. We've got weakness in bonds. We've got weakness in utilities. None of these are showing that change in rate environment. So it's kind of a head scratcher. Why are these sectors over here doing well today and these sectors over here aren't? Are the sectors over here flagging the potential? The market thinks that this is coming down the pike, and in which case they'll lead the utilities and the home builders higher? Or are the home builders and the utilities showing us the truth, and it's just a dead cat bounce in the small caps? We'll see. We won't know that until we get out a few more days. There was one other. Oh, banks. We want to look at XLF. So this is a very nice setup. I'm really tempted to get long in the room FAS, which is the 3X bullish version of the big bank index, or DPST, which is the 3X version of the small regional banks, also showing very much of the same setup. It looks a lot like the Dow Jones because the Dow Jones is driven higher largely by banks, the big banks, and this is just such a clean pullback in a tight, narrow range. We're starting to see this range slow down a little bit, but man, we're not there yet. You can't get too excited about this. We could get all the way down into the pink zone, the 50 or below, if the macro environment doesn't shift in the direction of lower interest rates, which is what will spur the banks on. Yeah, all right. That's about all I wanted to do with those. But just keep in mind, we've got some nice looking setups potentially forming for us. And I would rather focus on these big reward setups, lots of upside potential after being underperforming for so long, than on the mags that are already up at 52-week highs, all-time highs, and are showing such overbought condition. If you're long those already, hang on because they're not showing sell at all. In fact, a couple of them that we saw look like they're ready for a new leg higher, but not a good risk to reward scenario for most of those right now. So let's find some other opportunities, and there are plenty. There are plenty of them out there. One last thing I want to show you. We could look at power gap setups. There are a lot of them here that are starting to look pretty good. FLUT is nice looking high tight base forming. PODD. I have this on my trend trade letter, but I don't think it's hit our entry price just yet. Here's a bank. Here's a bank. We're along APO already. We're taking profits from this every week by selling premium. It's been great. Snow, I think, has some good potential, right? Breakout to 52-week highs, pull back to near the 21. Big reversal bar today. Really, really nice. Just light volume, unfortunately, and it has been in a pretty long-term downtrend. So, but this is a power gap. This is the power gap I'm talking about. Big jump up to 52-week highs, I think, at least not close to it. Rally a little bit higher and then pull back to test that gap and right back up today. I'm going to actually add this to my greens list because that's looking much better than it looked this morning. KKR is a really nice looking setup, very strong company in the asset management space. I wouldn't call it best of breed. I would say that is APO, the one we're in. But we did a swing trade on this last week. We took some profits, and it's still set up quite nicely. This is a power gap setup, right? Here's your power gap, 52-week highs, rallied further, pulled back. That's your entry. That's what we did last week. And then you are waiting for the breakout. I think breakout probably coming on Wednesday afternoon. All right. We could keep going through those. Let me show you some of IBD's top 50, or I should say top 15 to 20. CLS, not a buy, but it is very strong. RKLB, looked at this one this morning when it was red. It was down here dipping under 24 right off the bell. And I did say in the room, I'm stalking RKLB, and then I got caught up in some other trades, and it went right back up. It's a little long right now to join, a little bit chasey, as we like to say, but I do like the fact that this is a power gap down here, rally up high, pull back to the 21, bounce cleanly today, Friday and today. And Friday was a weak market day, so the fact that it was strong on Friday and following through today is very, very bullish. PLTR has been weak. It's been all over the map today, just getting to be kind of messy. So I think this one needs to come back in a little bit before I'm interested. We are long this one, HIMS. It was down here just slightly red when we bought it, right off the 21 period moving average. This is a power gap, rally, and pullback setup. We bought the pullback, HIMS. RS is one I almost got us into this morning. AXON also showing a decent setup. It is one we bought this morning. AGIX, power gap, pullback, rally, pullback. So uptrending LRC, we bought the pink zone. This has very strong fundamentals. It's an industrial play. We're also long VRT. This is one we're selling premium on, so we don't need it to go any higher than it is right now. We just need it to stay up above 125. We'll take full profits this week, and it's very, very strong. It was just added to the IBD top 10. We are also long today a Bitcoin miner. Everything Bitcoin is doing really well. MARA, and we had it's not a power gap because it's not a 52-week high, but it was a big gap, filled the gap right back up to possibly no, not quite, to range highs, pull back to the 21, and nice gap and go today. So we went long this. We're also long Bitcoin itself in the live room, and yeah. So there are some sectors that are doing really, really well that have lots of upside with a tight risk down below. Most of those are not in the mags, right? So I know it's fun to trade the mags, and it's fun to say, oh, I'm long Tesla, and here it is at new all-time highs. I can say that because I'm long in the family fund, but I can't say that I got into it on a swing trade. For swing trades, remember our time frame is pretty short. Our average hold in the room is about 2 to 3 days. So we're looking at short-term time frames. That means we have to be very selective. We have to look for upside risk, or sorry, upside reward and very low risk. And those setups are few and far between right now, but they're not among the mags. They're in some other sectors. All right. All right, guys, that's all I have for you today. I'm going to stop the recording right now. I'll jump back into the live room. I'll take your chart requests and we'll go from there. Just give me a moment or two. God bless everybody. Bye for now. We'll see you back in the room tomorrow.